Hello, welcome back to Learn Oikonomia. Today we are going to see the global banking crisis and its impact on India. We have been seeing the falling of the banking system of the hegemonic power of US. The Silicon Valley Bank has collapsed, as well as we could see that the Signature Bank. So these two banks, the Silicon Valley as well as the Signature, has been collapsed. And after some time, we could see that the Credit Suisse also is worrying the investors. As a result of these falls, many are concerned about the impact of the banking crisis on India. Since we are living in a globalized world, the event that happens in one part of the world will be having its repercussions on the other parts of the world as well. So almost the similar kind of thing happened during the 2008 period as well, and that is what we have in the form of the financial crisis of 2008. The very same crisis also started with the banking system. It happened with the burst of the banking bubble. So are we going back to the 2008? Is it a return to 2008 again? We have to answer these kinds of things, and also we need to understand what is its impact on Indian economy. Let's look at the Silicon Valley Bank as well as Signature Bank collapse. So the collapse of the Silicon Valley Bank, which is considered to be the 60th largest bank in the US. And why this had collapsed? This had collapsed due to the financial management. Now coming to the decline of the Signature Bank. Then the decline of the Credit Suisse Bank. The share price of that had been declined. So all these in combination have raised the concerns about the safety of depositors' wealth, not only in US alone, but also globally. So the people who have invested in the shares of the bank have lost all the value, as we could see that the Silicon Valley Bank's equity has been wiped out. So this is impacting the confidence of investors. Coming to the global impact of the same and how it is impacting the Indian market. So the failure of all these banks would definitely have a global impact because we are living in a world of globalization, and this would be causing panic and this would be causing discomfort in not only the banking sector but also the other sectors of the world. So we could see that this has caused a sell-off of the banking stocks, and coming to the case of India, this has made a decline in the national stock exchange market capitalization, and this happened on March 17. And all these things indicates that the investors are reducing their position as a result of the banking crisis. And the banking indices, if you look at the banking indices, again, these are facing some pressure, especially from the selling side. As a result of this can lead to depreciation of the Indian rupee. This will reduce the value of the Indian rupee. Sorry. And also this will lead to a tighter monetary policy by the Central Bank of India, which is the Reserve Bank of the country, or Reserve Bank of India. And as a result of all these kinds of things, there would be a flight of money because people fear that this will lead to the reduction in capital inflow, and also this would be having some negative effects on Indian economy. Moving to the aspect of safety of depositors' wealth in India. As a result of the fall of all these banks, the Silicon Valley, the Signature Bank, the Credit Suisse Bank, all these are raising questions about the safety of depositors' wealth globally. And the case of Indian banking system is also something which is very much unlikely. And that is why this made the Reserve Bank of India to classify banks. So it has classified the State Bank of India, the ICICI Bank, HDFC Bank, these as the domestically systematically important banks. Why? because these would require them to earmark the additional capital as well as provisions in order to safeguard their operations. And why the Reserve Bank of India has gone for this kind of classifications, because this would be ensuring that these banks are better equipped to handle the risk, any potential risk. And also, these banks are less likely to fail. This is what is expected. Moving to the impact on tech startups as well as IT firms in India, we know that the human resource in India, which we sell to the rest of the world, or the flow of human resource to the rest of the world, this is mostly IT professionals. IT professionals, a lot of IT professionals are moving from India to the other parts of the world. And as per the opinion of financial experts, the impact of banking collapse would be having some limited impact on India. So primarily affecting the startups as well as IT firms. Why? Because these kinds of companies would rely on foreign investors. As a result of this, it would face some challenges in raising capital due to the banking crisis. At the same time, the impact on the other sectors would be minimal, and this is expected to be minimal. We don't know what will be the real case. We are expecting it to have some minimal implication as what we could have in 2008. Moving to the contagious effects as well as emerging market situation, the impact of collapse might be limited to India. That is what we are expecting, and that is what we have discussed. The spread of the crisis in the global era, in the global market, would constrain capital flow in India. And this is not only with the case with India, this would also be applicable to the other markets as well, other emerging markets as well. And this could potentially have some negative impact on the Indian economy as well as other economies, which basically rely on capital inflows. Moving to the impact of the very same on the crude oil prices. The fall of all these kinds of banks has sparked fears in the financial crisis, leading to a drop in crude oil prices. If you look at the case of India, India is importing crude oil for transportation, for the working of its factories, for all its oil requirements, for most of its oil requirements. And a fall in the crude oil rates is seen as a positive indicator for India. Why? Because the import price has been declining. That is what we expect. While the declining crude oil prices might be having a short-term positive impact on Indian economy, if you look at in the long run, you can see that a prolonged drop in crude oil rates could have some negative implications. Even this would be applied to the Indian economy because it relies on heavy oil imports. Moving to the impact of the very same on the US Federal Reserve. The banking crisis would definitely make the US Federal Reserve to take certain policies, and it would be ending its rate hike cycle as well. The Goldman expects the Fed to keep the rates to on the whole at its March 2021-22 meeting. And this could have some implications on the global economy without exception with respect to the case of India. So it would also affect the Indian economy. And we can also see that this is not limited to the US alone. It is spreading to Europe, it is spreading to Japan, where stocks, where government bonds, etc. are there. So if you look at the government bonds such as the JGB, it is falling sharply, mainly for those banks, pension funds, sovereign funds, high street business, etc. So these kinds of projects, these kinds of stocks, bonds, etc., and also the crypto assets are facing some kind of fluctuations. International ratings would be falling for several countries. Sorry. So international ratings which is given by certain agencies like the Moody's, have downgraded the American banking sector. It was earlier given a stable rating, now the rating has gone to negative. Why? Because it is experiencing some systemic risk. And after the crash of the Silicon Valley Bank, the banking stocks of the world market, this is also experiencing some fear. And also, the Swedish pension fund, this is also experiencing some fear. The Indian stock market, this has been dominated by the foreign institution investments or foreign institution investors, and responsible possibly through the anonymous participatory notes for investors not registered with the head of the secondary market, that is the Securities and Exchange Board of India. So these are considered as offshore derivative instruments. Any profit which you collect from these kinds of PNs would go to the original investors. And this is better on a lower value of the stock than its prevailing price. And if you look at the case of India very specifically, it has been seen that this is considered to be the most likely method used by certain very, very famous companies so as to cause a bloodbath in Adani Group stocks, cause fraud and overvaluation accusations among the others. So, in the case of the Hindenburg banks, its money was the First Republic Bank that saw a fall, and when we say fall, a sharp fall in the stock prices since the beginning of the trading week. And this has caused a run on its deposit. Several other banks are also experiencing problems. If you look at the situation, we can see that the Western markets have taken a tumble and higher interest rate. And these have largely closed the window for the arbitrage facility and also the foreign currency gains of which would be coming from the foreign institution investors. So we expect that it might be the time for the large domestic institutional investors and the retail investors to take over. And this is more so. Why? Because the foreign institutional investors are still not really trusting the Indian stock markets. America has very little investment in India compared to what the other countries like China is having, and these would be clinging. Therefore, there can be some notable exceptions. Why? To outdated notions of the Western economic superiority. We have heard about the economic power, the hegemonic power of the US, and this would be running mostly to the US stocks at the first opportunity due to the same reason again. So, as in 2008, the financial crash which started in USA and then it spread to the other markets, then which led to the problems in the other economic situations or other economies. We are believing that a kind of similar situation has again happened. However, most world economies, especially the Western countries in particular, stubbornly believe that all will be well if expert analysis is to be believed. Again, we need to understand that the future is very, very uncertain. We cannot predict the future. Anything can happen. And America is the most indebted country in the world. It has having a debt of $32 trillion in direct national debts, accounting to 96% of the current GDP. Then, if you look at the US liabilities, this is under different classification that take this figure much, much higher. And the bank bailout is very, very much contingent on the credible collateral, like the US Treasury bonds. Then, these banks are vulnerable to problems on the liquid assets whenever there is an asset anywhere in the system. That's why people are also afraid. People with the US bank deposits are very, very nervous. They are trying to withdraw their money despite some kind of assurance given by the bank and also by the president. Gold prices, if you look at gold market, gold prices, it also giving some financial instability, and these are also rising fastly, instantly. Now, a global recession situation. Are we going to that? It is gaining momentum, and this is what is told by the World Bank. Why? Because of the increasing interest rate, tighter monetary as well as fiscal policy on many countries. We told that India is dependent to a large extent on foreign investors. It is also depending upon the domestic market, and we are expecting that it will continue to grow at 7% in GDP on year. It is only a $3.5 trillion economy. So that is why we consider that it will be an exception. India is expected to become a $5 trillion economy by 2028, quite independent of its global volatility. But again, we need to think, India is also a part of the world. Whenever something happens in any part of the world, can affect India as well. But how can be the impact? Is it having a very depth impact? Would the impact be an in-depth thing or a simple thing? That is where we have to concentrate upon. Now, the World Bank has recently sanctioned $1 billion soft loan. This is mainly to improve India's health infrastructure. If you look at COVID situation, you can see that India has been a very important contributor to the world in supplying vaccines. What India, after getting the soft loan, has done is that India has extended the soft loan to its friendly nations in its immediate neighborhood, among to $15 billion since 2014, when it was just a $3 billion before that. So this is made to have a smooth trade relationship with nations like Bangladesh, Sri Lanka. So that is what had increased the trade to 50%. Increased 50%. Okay, this 50% has happened. And Sri Lanka is trading with India in rupees. And this is basically to conserve the hard currency. Now, moving to the case of Europe, we can see that Germany's Commerce Bank as well as the weakness of the Swiss bank, Credit Suisse, this had took some hit on other valuations as well. So many commodities were affected. Certain items like copper, certain items like gold, etc. were priced up in many economies, including India. And gold is now above the key rate of $19,000 level. Not 19,000, 1900 level. So what we can see is that India has chosen this moment a request a sovereign rating upgrade. And this, when India does, this is without cracking a smile. So whenever India says that we are safe, India would ask to itself again, are we really safe? So that's all for today. You can like, share and subscribe to this channel for more videos, and you can be a part of my Telegram channel and Telegram group to discuss and make your comments. Okay.